Welcome to day 30. I'd like to congratulate you guys for making it this far. It's already day 30. But first of all, don't mind me. I'm doing laundry right now, right next to me, so it might be a little loud. So bear with me, chat. Bear with me. But I did put on my mic today, so. But before that, let's get right into NZDJPY. If you guys watched my workshop from the previous episode, we know that we entered on NZDJPY together. Maybe together, maybe not. But like I said, what did I tell you guys? What did I tell you guys? Isn't it fascinating that the wicks are just playing out to perfection? What do you mean, Ivan? What is this? What is wicks? Wicks is something that I discovered whenever it's in a strong bearish or bullish momentum move. We know that price is either going to touch the highs or the lows. Very unlikely that it's going to touch both. And it played out to perfection. What happened Monday? We did not trade because price hit the bottom of the lowest from Friday. What happened Tuesday? Tuesday did not hit both, but that's where we entered. Why? Because we placed our stop loss below the Monday's low, because that's our reference point, assuming that Tuesday would hit the highs of Mondays, right? So that's Tuesday. And then when Wednesday rolled around, same thing. We have a visual stop loss at the previous Tuesday low, predicting that the highs would be tapped by Wednesday, right? And guess what? It tapped at Wednesday. So, and then Thursday, what happened? When Thursday rolled around, same thing. I told you guys this during workshop 29, right? What happened here? The price is either going to tap the high or the low, and it never touched the low. It touched the high. Boom. It just proved my theory. And then now Friday rolled around, same thing. The visual stop loss was right here. I even had an alarm here. Mind you, right now it is currently 9 a.m. 9 a.m. And today is a Friday. So what does that mean? Today was NFP. Exactly. Non-farm payroll. So, but you shouldn't trade during news. I was not trading during news. I was trading on pure market structure, pure technical analysis, and I did not trade on Friday. Technically, I did not. I already traded during Tuesday, and price usually respects the price action when news flash comes around, right? And then what happened Friday? The visual stop loss was at Thursday's lows, and then it tapped on Thursday's highs. Was I nervous? Old me, yes. Like 1 year or 2 years ago, I would have been so freaking, I would have been so freaking nervous. Why? Because look, price came down multiple times to my drawdown, more than 70%. I could have lost this trade. If I had this doubt in me, I would have closed this trade and be like, wait, the 4 hour is bullish and then it's bearish. And then it made lower lows, lower high, new lower lows. I would have closed my trade right there, back then and there. But again, this wick thing that I discovered is really a game changer for holding trades longer. And it builds more confidence for me to hold my trades longer, right? I'm not saying this can hit the lows and highs. I'm saying it can hit the lows and highs today, but I'm just saying probability-wise, it helps me hold my trades longer. And I hope this could help you guys hold your trades longer and not have this fear of, getting out because something, right? They say you always want to do all the thinking first. And when you enter the trade, you don't think, and then you exit. That should all be done before you take that trade. Am I right? So that's why. You never want to be thinking during the trade. The thinking should already happen. That way you don't have to think about it. When you lose, you lose, which is why risk management is important, because you accepted that you are going to lose this trade and you're not going to bitch about it if you lose the trade, all right? I risked $1,000 in this trade. I'm not going to bitch about it because my subscribers, it's a celebration for my 1,000 subscribers. So of course I'm going to risk that much, right? I'm not going to bitch about it if I lose, right? I'm not going to think about it. And it's I'm just telling you guys, man. Did I bitch about it here? Did I bitch about it? Did I bitch about it here? Bro, I was sad, but I didn't bitch about it. I was ready to lose this trade if it does tap the lows. See, I had my alarm set right here, here. So yeah. But keep in mind, this was a high risk trade because look at this. This huge move right here. Usually price would come here when it moves to a very high. It would give a little, some sort of 50% pullback. Usually, that's usually how it goes. But again, this is a high risk trade. So without further ado, let's get in right to the checklist to review the cap. This trade was 80% overall. I checked. Could have been a 90% if I included the 4 hour, but I'll explain to you why I did not. So you guys, some of you guys asked, like, how do you guys use the checklist to enter your trades? First, I would like to clarify the checklist is simply purely just a checklist. It's not for you guys to take the trade because it's an 80%, because it's a 90%, because it's 120%, 1,000%. At the end of the day, you will still lose because the market, you will never know where the market goes, up or down, sideways, zigzag, circles, we don't know. So every day is a learning day. But what we do know is there's more confluences to help you gain confidence to take the trade. And it's also gives you chances of you taking high probability trades and you following your trading plan, because those are what's important. What's not important is how the trade plays out, because we can't control that. What we can control is our risk management, our trading plan, and probabilities and confluences that we did our homework. So let's go over. First, we have to find the trend. That's important, right? So in this case, the weekly and the daily were bullish. We all know that. So we check the trend at the daily and the weekly. After you check those two, you go down to, I went down to the weekly first. So what do we have at the weekly? We look at the weekly. What do we have? So when we're looking at the weekly, we don't focus on this one right here. We don't focus on this week's. We focus on last week's, right? For the area of interest, we focus on this week. But for the rejection from previous structure, the candlestick rejection, the head and shoulders pattern, these three right here should be this candlestick. It's asking if this candlestick formed the head and shoulders pattern, if this candlestick had the rejection. See, this could be a rejection, but we're asking for this one. Is this one a rejection? No, because price is still playing out. So this one is not a confirmed readiness for us to read the price, but it is definitely ready for us to read if it's at the area of interest or not, because that's live right now. But these are confluences of what price has happened for you to take that into consideration. So what do? We did not check any of these because there's no rejection, there's no candlestick rejection, there's no area of interest, and there's no head and shoulders pattern. What, Ivan? But there is literally a head and shoulders pattern right here. Yeah, there's a head and shoulders pattern. You can count this as, but where's the retest? Where's the push, right? There's a head and shoulders pattern, yes, right? But price has to pull back to the neckline for it to be considered a potential trade. So that's why I did not check this. But yes, you guys can check this. You guys can check this if you want, because it is a head and shoulders pattern. You are right. But at the end of the day, this perfect checklist is for you to understand yourself and to give yourself, based on your own risk tolerance, your confluences, right? In my opinion, I'm not going to count this as my confluences just because there's the head and shoulders pattern, because this trade played out. Unless there's a pullback here to the neckline and maybe potential push to the upside, I will count this as a pattern to my advantage. But right now, this is not at my advantage because price would have to pull back here to then for me to consider that there's a head and shoulders pattern into consideration to the previous structure point, head and shoulders pattern point, and everything. But I'm not trading this pure based on head and shoulders pattern. So I did not check that, right? Then we go to the daily. There's a trend, right? So when we go to daily, we click on the daily, right? That's what we do. And then what happens here? There's a bullish here. Is there a retest at the previous structure? No. Is there? Wait, Ivan, but there's literally a wick here as the structure. Again, previous structure is when there's a candlestick closure. Is there a candlestick closure here that retested using the previous structure to retest? No, this is just a wick. This is not a structure. If you go to the elbows here with the line, there's no elbows here. Yeah? You're just retesting air. There's nothing. Anyways, let's get back to the point. Round psychological has already been checked because it's universal. If the weekly has the round psychological, right, which is right now right here, 89, flat, right? remember, if you guys don't know what round psychological is, go back to the workshop, right? So once it's checked, it's universal. It's already checked everywhere, so you don't need to check it again, right? That's just adding confluence that exists already, and you're just like lying to yourself. And here's another thing about confluences. You don't want to lie to yourself, right? Like I could have lied to myself that, oh yeah, there's technically a head and shoulders pattern, so then I can boost up my confluence, my percentage. This 80% could have been 100%, but again, I would be lying to myself. I can admit I was like that back then. I would, lie to myself that this is a pattern, this is a high probability setup because there's a head and shoulders pattern, because I see this is kind of ugly head and shoulders pattern, but yeah, it's a head and shoulders pattern, or this kind of look like it's a rejection, but yeah, it's a rejection. I would lie to myself. But the fact that you're even questioning about it, you shouldn't even include it in your confluences, because honestly, you're risking your hard-earned money, and you don't want to have doubts in your confluences. You want to be confident in your confluences, and this is this. You want to be not confidence. Don't mix confidence with confusion, and don't mix that with lying, because you can be confident at lying. We want to be true to ourselves, honest more than confidence, in my opinion. So let's be honest here. Daily area of interest. So here's another thing to clarify. If you have the weekly area of interest, you basically have the daily area of interest. You basically have the 4-hour area of interest. Oh my gosh. But what if I only have the daily area of interest? Then you don't have the weekly area of interest, you have the daily area of interest, and you also have the 4-hour area of interest. Why? Because at the end of the day, what? All of this is basically the same shit. All the time frame is the same shit. We are just zooming in. So if we zoom in here, of course there's reaction at this area of interest. Of course there's reaction here, reaction there, But back at what we talked about, disrespect and respect. There's going to be more disrespected in the lower time frames because more prices moving around, right? There's more disrespect on the daily because, see, boom, 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 because our area of interest, boom, 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 is at the weekly, right? That's just how it is because it's just a zoomed in version. But I want to clarify that if you have area of interest from the higher time frame, then the lower time frames automatically have the same area of interest as well, right? So let's not get that confused. So I checked the area of interest at the daily as well because we already have that at the weekly. Okay, Ivan, why didn't you check anything from the 4-hour? Well, because I did not use the 4-hour. The 4-hour, let's go back, right here. It was bearish. Before I entered the trade, it was bearish. See, it was bullish, right? And then it went bearish. So I cannot use that. If you don't check the trend, you shouldn't check anything. See? Because we are trading based on trend. And if the 4-hour trend is bearish while everything else is bullish, it doesn't make sense for us to use the 4-hour as a confluence because we did not use the 4-hour as a confluence. The 4-hour is actually contradicting what we're saying. We're saying that the market is bullish based on the higher time frames. No, not based on higher time frames, based on the trend in sync. So right now, the daily and weekly are in sync, and we're using daily and weekly as a confluence to go to the upside. So we should not use the 4 hours as a confluence, even though there's a rejection, even though there's a touching EMA, even though there's a round psychological, even though it's at the area of interest. This is 4-hour rejection to the downside. It's telling us that it wants to continue to go down. So why are we using it as our checklist, as a confluence to go to the upside? It doesn't make sense. See my point here? That's why I didn't. This is why this is 0% at the 4-hour. All right. Moving on to the lower time frames. Right. 2 hour, 1 hour, 30 minute. What do we have here? Why, Ivan? Why did you enter? Why did you enter? Look back at yesterday. Why I entered. I already explained to you guys. I saw the head and shoulders pattern at the 1 hour, touching EMA. Right. This one I didn't really have to check honestly because the EMA again is a universal thing. If the higher time frame has the EMA, then the lower time frames would have the EMA as well. But I checked on the lower time frame because the higher time frame did not have the EMA, right? So when we scale down, then there's the EMA, then I can check it. But if I already checked the EMA from the weekly, then I don't need to check the EMA at the lower time frame because it's a universal thing. But since there's no, so this is why it's top-down analysis. We go from the higher time frames all the way to the lower time frames. And from the higher time frames, there's no EMA. So then once we zoom into the lower time frames, yes, there's the EMA. Where's the EMA, Ivan? Right here at the 2 hour. whichever looks cleaner. Look, there's also EMA at the 1 hour, but is it clean? No, because it's using it as a what? As a resistance instead of a support, right? You can count this as one, but 2 hours much more cleaner because it just looked like the structure came here and then rejected from it, right? Boom, boom. So that's why I used the 2 hour, but it doesn't matter because we were using the lower time frames anyway, so any of these would count. But I'm just asking you guys, which time frame looks clean? That's all that matters. Next, we already understood why there was a shift to structure and everything. Stop loss, take profits. This is a must. This one is a must, right? You don't even need to check this in the Confluence. You should be doing this already. You should be knowing where your stop loss, take profit is, because back at to the question of you have to finish thinking before you enter the trade, right? You have to journal before you enter the trade, right? So you should already know where your stop loss and take profit is when you enter the trade, right? If you don't know, we already reviewed it during the wicks part 2, right? We know that. What do we know here? This is the lowest. So when we entered on Tuesday's trade, we are doing probability games here where, okay, if the lows tap, then I'm wrong. If the highs tap, then we're good, right? So we already know where the stop loss is. Take profit. You never want to set your take profit, but you should already know like the understanding of where the price should go. My take profit was right here at the weekly. You see? Right here. But we never know what price is going to do, so we're going to see how price reacts. If price gives us an engulfing move right here, fuck, I'm going to continue to hold and then continue to hold. We don't know. But if price gives me that rejection right here and wants to pull back, fuck, I'm going to get out. Take profit, you know? Yeah, this is how it is. So stop loss is the important one. It's the one that's going to prevent you from losing. I'm not saying you're not going to lose. It's just going to prevent you from losing a huge amount of money of your hard-earned money. And then once you finish your checklist, boom, we should have an overall percentage of 80%. So this is the trade. Okay, Ivan, so what are you going to do now? Are you going to close the trade? It is Friday. It is Friday. I forgot to tell you guys. Usually, we enter trades during like Monday, Tuesday, Wednesday, right? But when Thursday, Friday rolls around, it just so happened that today is NFP, right? If today was just a regular Friday, I would consider closing this trade already. Why, Ivan? Well, because Friday, usually there's no volatility. What happens if there's no volatility? Price won't move. It won't go up or down. So I would have closed the trade right here when I saw that the 4 hour shifted to the downside. Because one, it was already so close to touching the lows. And two, I understand that Friday there's no volatility. So there's no way that it's just going to go down, and then go all the way up. It just doesn't make sense. But since today I made an exception because there's NFP, price can have huge volatility either going all the way down or all the way up. So by knowing that my stop loss is right here, and by knowing that, okay, if price respects the trend, respects the lows, then there should be no question. I can put my stop loss here. If I lose, I lose. But if there's a push, then I'm good. And it just so happened that we're good. But we want to constantly keep an eye on the chart around Thursday and Friday, because that's when there's low volatility, because people are closing out their positions. They're not holding throughout the weekend. And that's why when there's no volume, price won't push. It won't go anywhere. Unless you're confident that it will continue to roll over next week and continue pushing high. All right? So now the main question is, Ivan, are you going to hold your trade throughout the weekend? Any guesses? Any guesses? Well, the answer is yes, I am going to hold the trade throughout the weekend. Why? Because if price, depending on how Friday today is going to close. Why, Ivan? Why? Because price is already so high right here. If the candlestick closure closed right here and here, just think about it. Look at it from the weekly perspective. What do you guys see? Exactly. The high is just like right there. It's like, let me give you a ruler. It's literally 3 pips away to hit the newest high. Of course I'm gonna hold it. Of course I'm holding it. The probability of price going all the way down to disrespect the low is 87 pips. 87 pips. If you guys don't know what pips are, bro, you need to go back to day 1. unless I never revealed about pips. Maybe I got to talk about pips. If you guys want me to talk about pips, we're going to talk about pips. But pips is basically a measurement of price in Forex, right? So would you rather have this probability of price hitting, just 4 pips? Or would you rather think that price is going to go all the way down to 89 pips? Think about that for a second. Let that sink in. If Friday closes like this, right? And Monday opens next week, right? It hasn't happened yet. Next week, when we're still holding the trade, what do you think will happen? What do you think will happen? Yeah, price can go down first. Price can wiggle around here first. Maybe price will never touch, the highs and lows. Or it'll take a lot of freaking money to push the price all the way down here. And I'm talking about 80 something fucking pips, bro. Or do you think a little money to push, the highs of the previous highs, See, you got to think about that for a second. I'm not saying it's going to go up. I'm saying based on probability. I mean, just look at Monday. Look at last week. Look at last week's Monday. Price closed here. I did the exact same thing. I thought to myself, okay, Ivan, there's like right here. There's like a 5 pip. There's a 5 pip chance that the money movers just needs to use a little money to push this price 6 pips and break, the highs, versus using so much money to push the pips all the way down, like 200. This is what 233 pips right here to try to push the price all the way down. Because what do we know? What do we know, Ivan? Oh shit! What the fuck? We know that price either wants to go up or down, right? But price also wants to touch the highs or the lows when it is what again? When there's a strong move. So when there's a strong move right here, what does price wants to do? It wants to touch the highs or the lows, right? In this case, even this wick right here, it touched the highs, right? This one, liquidity grab, highs, right? Uneditable. This shit happens. Shit happens. Right? But look at this. Look at this. Even this. What do we know when candlestick close here? What happens? The next week, it respected the lows and hit the highs. Look, the wick fill. You know why there's a wick fill? Because it wants to fill up the wick. It wants to tap the highs. And that's exactly what it did. What happened to even this bearish candlestick, right? What happened? It respected the low and it tapped at the high, right? Only like what, 4 or 5 pips, but it still tapped the high. Even this, didn't hit the lows because look, the low is just, price opened right here and it's just so far away versus just tapping the highs, right? Especially in a strong momentum move. Sometimes, again, the probabilities when the highs and lows have a huge range, right? The probability gets harder for it to touch either the highs or lows, but I'm not saying it won't, because next day rolling over, it respected the lows and tapped the highs again. Respected the lows. Look, even this trade right here, respected the low, tapped the highs right there, right? Respected the low, tapped the highs right there, right? And this is how you know that there's a reversal. Respected the high and tapped the lows. There we go. There's a reversal. There you go. Anyways, I hope this helped a little bit. Again, it is confusing, which is why I keep revealing about this. Again, it is something worthwhile to consider and think about. I'm not saying it's right. I'm saying it just helps to hold your trades and hold your winners longer. And with that, I'll see you guys tomorrow. I bounce.